Welcome to the WAM Alternative Assets Meet Our Investment Partners series. I'm going to introduce you to our investment partners and talk about the opportunities and strategies that are available to WAM Alternative Assets. I'm joined today by Nick Dignam and Nick Miller. Nick, would you like to give us more information about your background and your career in private equity, please?
Thanks, Dania. I've been working in the Australian private equity industry for over 15 years, and prior to that, I worked at Ernst & Young in their transaction advisory services business.
Thank you. And what about you, Nick?
Yeah, sure, Dania. I started life as a civil engineer and then transferred across into investment banking and then ultimately into private equity and private investments in 2007. So similar to Nick, over 15 years experience in principal investing. And just going through the GFC and coming out of it and seeing those cycles been invaluable, particularly over the last 5 years.
Well, great to have you here. Would you tell us more about Fortitude Investment Partners and maybe also to give our shareholders some information on the investment strategy that you follow?
Sure. So Fortitude Investment Partners was started about 3 years ago, but the team's been together as a group investing in growth equity in Australia for over 8 years. And our strategy is to focus on privately owned businesses that are looking for capital in order to supercharge their growth ambitions or expectations. And so we look to partner up with those businesses, providing them with equity capital to support their growth, as well as providing strategic input and expertise to help accelerate their growth, with the expectation that the businesses we invest in will be much larger businesses at the end of our investment than what they are at the beginning of our investment. Fortitude has about 300 million of assets under management. We've made 17 investments together as a team. We've sold 5 of those investments, so we have a portfolio today of 12 businesses, and our realised net returns to our investors over those 5 realisations has been above 20% per annum.
Within private equity, there are a number of strategies available to investors depending on the risk-return appetite, and I know you are focusing on private equity growth. Would you be able to tell us more about the strategy and how it is different from other private equity strategies?
So for us as a growth capital investor, fundamentally we're looking for outsized returns, and that manifests itself in a couple of ways. One is what we're looking for. So we're looking for businesses that have strong tailwinds behind them in terms of the industries that they operate. We're looking for businesses that have defined competitive advantages within those industries, and we're looking for teams within those businesses that can execute on a growth plan. And for us, our focus, there's 2 key themes that we really like, and that is health and wellness and digitisation of the economy.
It's always fascinating to talk about private equity, and it does sound like a very exciting asset class. What I really like hearing is when you give examples of the deals and kind of talk through the journey when you make an investment from where you can take the business to where. And I thought maybe you would share a few examples with our shareholders from your existing portfolio or maybe some of the deals in the past.
Sure. And I think one way we might approach this is we've got a very sector thematic within Fortitude. And there's 2 key thematics that we really like. One is the digitisation of the economy, and the other is health and wellness. And so we might take an example from each of those just to answer the question. And so with digitisation of the economy, that can manifest itself in many different investment theses. And one that we had was around enterprise software. So we've had a sector team, which is the tech, media, telco sector team, operating for the last 2 to 3 years, looking at enterprise software businesses. And ultimately, this has led to the investment in Shorthand, which we invested in about 12 months ago.
And what kind of business is it? What do they do?
So it essentially allows content creators to put together a very emerging and engaging digital communication without the need for graphic designers, without the need for web developers. It's an out-of-the-box software solution for someone who's trying to create digital content that's engaging, and it ultimately leads to more eyeballs on a piece of content at a lower cost.
And within healthcare, I know you did an interesting deal in that sector as well. Would you like to tell us more about this?
Sure, happy to. So yes, healthcare is sort of the other key industry thematic that we focus on at Fortitude. And within healthcare, we particularly like the thematic around corporatisation of healthcare. And what that means is there's a generation, a baby boomer generation of healthcare professionals that started small businesses, whether they're medical practices, dental practices, etc., who are getting to retirement age. And so creating platforms for those privately owned clinics to sell into. And so that's that style of investment is one that we focus on a lot. An example of that is an investment we made in a business called Better Medical, which we made back in 2017. So we provided this group at the time, which only had 6 medical clinics, with expansion capital to help them buy clinics from this baby boomer generation of, in this case, it was general practice medical centres. And the focus of the strategy there was acquiring clinics that were in good demographics, which had a very loyal patient base, and not changing the way that the clinic would interact with the patient. So providing all of the benefits of being part of a corporate at the back of house, but not changing the way that the doctors and patients engage with each other, which is a little bit different from some of the other models that have been executed in the past. So we helped that business grow from 6 clinics to 35 clinics over a 3.5-year period, and then ultimately sold the group to a larger private equity firm.
But I'm also very excited about our separate mandate that we're working on establishing with you, and would you give us a flavour of what type of deals we would invest in within that mandate?
Yeah, absolutely. And likewise, very happy and looking forward to the partnership going forward. I think that not only from our values and putting investors at the heart of everything we do, but also from a thematic driven, there's a lot of crossovers between Wilson's and ourselves. There's 33 businesses that are sitting on our live pipeline at the moment, and it normally sits between 5 and 15, so we're seeing a lot of opportunities at the moment. And to give you a flavour for a few of those that we've met just in the last week, from my perspective, one was a drone services business. So for example, if you're in the testing and inspection market and you need to have a look at things that are at high places or in remote places, sending people out can be bad from a health and safety perspective, but also can be inefficient. So using technology to solve that problem, and we're just at the tip of the iceberg in terms of what we can do within those types of areas. So that was one. Another one was in cybersecurity. So a cybersecurity services business that's looking to bring in and add to its product suite going forward, and wants some investment in terms of thinking about how they can go about doing that, and what potential businesses are out there to buy as well. That's relatively early stage, but we often find that we have an initial conversation and then over a number of months build up that relationship, start thinking about the value we can create before going on and talking terms and those types of things.
And I also wanted to thank you for the partnership. It's not an easy class to access for retail investors. It's usually an asset class that brings a lot of complexity in the portfolios, has large minimum ticket size, and many investors are looking at this as a very attractive asset class to have within the portfolio. So I'm looking forward to continue working with you and to continue delivering the results for our shareholders. Thank you, Nick.
Us too. Thanks, Tanya.
Thank you, Dana.